Money. It's the foundation of everything in our modern world. It dictates where we live, what we eat, how we travel, and the opportunities we have. But here's a question that almost nobody asks. Where does money actually come from? Most people believe that money is printed by governments, carefully managed, and backed by something of value. But what if I told you that banks have the power to create money out of thin air? Not by printing it, not by mining it, but by simply lending it. It sounds impossible, almost like a magic trick. But this isn't magic. This is the hidden secret of modern banking, a system designed to keep you in debt while banks generate wealth from nothing. How does it work? How do banks create money out of nothing? And what does it mean for you? Let's uncover one of the biggest financial illusions of our time. The illusion of deposits. What banks don't want you to know when you walk into a bank to deposit your hard-earned money. You might think that it's sitting safely in a vault, waiting for you to withdraw it when needed. That's what banks want you to believe. But in reality, that money doesn't just sit there, it gets used in ways you wouldn't imagine. The moment your money is deposited, it stops being yours in the way you think. It becomes a liability for the bank, something they technically owe you. But instead of keeping it safe, they use it as a tool to create even more money. Most people assume that when a bank gives out a loan, it's lending money that it actually has. That's not true. Banks don't need to have the money they lend. They create it on the spot. Here's how the trick works. When you take out a loan, the bank doesn't move money from someone else's account. Instead, they simply type numbers into a computer. That's it. A few keystrokes, and suddenly, you have a loan. That money didn't exist before, but now it does. This is called fractional reserve banking, and it's how banks multiply money out of thin air. It's not backed by gold, it's not pulled from a giant vault, it's literally created with an entry in the system. This means that for every dollar you deposit, a bank can create multiple dollars in new loans, expanding the total money supply without actually producing anything of real value. So, where does this system come from? How did banks get this power? The answer lies deep in financial history, where an ancient trick used by goldsmiths turned into the foundation of our modern economy. The Goldsmith's secret, the birth of fractional reserve banking. To understand how banks create money today, we have to go back in time, centuries before digital banking and high-speed transactions. In the past, when people used gold and silver as money, carrying large amounts was inconvenient and risky. So they started leaving their gold with goldsmiths, who issued paper receipts as proof of ownership. Over time, people realized they could trade these receipts instead of carrying the actual gold. These paper notes became an early form of money, as everyone trusted that they could be redeemed for real gold when needed. But here's where things get interesting. The goldsmiths noticed something peculiar. Very few people actually came to claim their gold. Most just used the paper notes for trade. And so, the goldsmiths saw an opportunity. They started issuing more receipts than the gold they actually had, lending them out to people in exchange for interest. This meant they were creating money out of nothing, just like banks do today. The system worked, until too many people tried to withdraw their gold at the same time. That's when the whole illusion collapsed, revealing that there was never enough gold to back all the paper money in circulation. This is exactly what happens in modern banking, except now, instead of paper receipts, we use digital numbers, and instead of gold, money is backed by nothing but trust. The system has evolved, but the principle remains the same. Banks create money by lending more than they have. And this has consequences that most people never realize. The debt cycle. Why you're always owing more. Most people think of debt as something personal, a mortgage, a student loan, a car payment. But debt is not just an individual problem, it's the foundation of the entire banking system. Think about this. If all debts were paid off tomorrow, there would be no money left in circulation. That's how deep this system goes. Here's why. When banks create money by issuing loans, they don't just give it away, they attach interest to it. This means that every dollar in the system is owed back plus more. So where does the extra money to pay the interest come from? More loans. Governments borrow money, corporations borrow money, individuals borrow money, and to keep paying off this ever-growing pile of debt, new money must constantly be created. It's a cycle that can never truly end. If lending slows down, the economy contracts, businesses fail, unemployment rises, and financial crises hit. To prevent this, banks and governments keep the cycle going, encouraging people to take on more debt while keeping interest rates low to make borrowing easier. But here's the terrifying part. This system is designed to keep you in debt forever. The moment you try to escape, by saving money instead of spending, the entire economy starts to slow down. So what happens? They push you back in. Governments lower interest rates. They give out easy credit. They create inflation so your savings lose value, forcing you to spend. They do everything possible to make sure you stay in the game, even if it's hurting you. But who really controls this system? Who decides how much money gets created and who benefits the most? The answer lies in central banks, the mysterious institutions that pull the strings behind the scenes. The hidden power of central banks, the masters of money creation. Most people never think about who actually controls the money supply. They assume banks operate independently, lending money based on deposits and market demand. But in reality, the true power lies with central banks, the institutions that decide how much money should flow into the economy, and when it's time to take it away. So how do they do it? One of the central bank's biggest tools is setting interest rates. When they lower interest rates, borrowing becomes cheaper. Businesses take loans, people buy houses, spending increases, and the economy booms. But when they raise interest rates, borrowing slows down, businesses struggle, layoffs increase, and the economy contracts. With just a few policy changes, central banks can create economic growth or trigger recessions, affecting millions of lives. And here's where it gets even crazier. Central banks don't just control the money supply. They create money themselves. You might have heard of a term called quantitative easing. It sounds complicated, but it's actually simple. Central banks digitally create new money and use it to buy government debt, stocks, or other financial assets. This newly created money flows into financial markets, making the stock market rise, inflating asset prices, and benefiting banks and corporations, while the average person sees little to no benefit. In other words, central banks have the power to make the rich even richer while doing almost nothing to help regular people. This is why you see billionaires and corporations benefiting from economic crises, because when things go wrong, central banks flood the system with new money, and that money doesn't go to you. It goes to the financial elite. But what happens when too much money is created? That's when we get inflation, the hidden tax that steals your wealth. The silent thief. How inflation destroys your savings. Inflation is one of the biggest consequences of the money creation system. It's the gradual destruction of your purchasing power, making your money worth less and less over time. Think about it. Small diamond, a loaf of bread that used to cost $1 now costs $3. Small diamond, a house that was $100,000 is now $400,000. Small diamond, your salary might go up 5% per year, but your expenses rise by 10% or more. That's inflation. And it's not an accident. It's designed into the system. Because money is constantly being created, it loses value over time. And who benefits? Banks, governments, and people who own assets. If you have a mortgage, inflation reduces the real cost of your debt. If you own real estate, inflation makes your property worth more. If you hold stocks, inflation pushes prices higher. But if you're holding cash? If you're saving your money, working hard, and trying to be responsible? Inflation is stealing from you. And this is how the entire system works. 1. Banks create money out of thin air. 2. That money circulates through loans, keeping people in debt. 3. Central banks manipulate interest rates to control the economy. 4. New money floods into financial markets, benefiting the rich. 5. Inflation erodes the purchasing power of regular people. It's a system that ensures you work harder while your money becomes worth less every year. But here's the real question. Can this system survive forever? Or is it heading toward collapse? The looming crisis. What happens when money creation goes too far? For decades, governments and central banks have used the same playbook to fix economic problems. Money bag, print more money, downward trend, lower interest rates, bank encourage more debt. Every time there's a financial crisis, they flood the system with trillions of new dollars, hoping to keep the economy running. But here's the problem. This isn't a real solution. It's a temporary fix that creates bigger problems down the road. Think of it like a drug addiction. The first dose makes you feel great. But as time goes on, you need bigger and bigger doses to get the same effect, until one day, your body can't handle it anymore. That's what's happening with our economy. The more money central banks create, the weaker the currency becomes. The more debt they issue, the harder it becomes to manage. And at some point, the system breaks. We've already seen warning signs of what happens when money creation goes too far. Downward trend, hyperinflation in Venezuela. Prices double in a matter of days, and people need wheelbarrows of cash to buy basic goods. Downward trend, the 2008 financial crisis. Too much cheap money created a real estate bubble that collapsed the global economy. Downward trend, the 2023 banking failures. Banks that were too dependent on easy money started collapsing as interest rates rose. These are not random accidents. They're signs of a system that is pushing itself to the limit, and eventually, every system has a breaking point. So what happens if the next crisis is bigger than anything we've seen before? The coming bank runs. Why your money isn't safe. There's a dirty little secret banks don't want you to know. They don't actually have your money. Remember, under fractional reserve banking, banks only keep a tiny fraction of deposits in cash. The rest? It's loaned out, invested, or digitally created. This works as long as people trust the system. But the moment that trust disappears? The moment people start panicking and trying to withdraw their money at the same time? That's when we see bank runs, and once a bank run starts, it's nearly impossible to stop. If you don't think this could happen, consider what we've already seen. Bank 2008 Lehman Brothers collapse. One of the biggest banks in the world went bankrupt almost overnight. Bank 2023 Silicon Valley Bank failure. A U.S. bank lost billions in deposits as customers panicked and withdrew their money. Bank countless historical examples, from Argentina to Greece. People have woken up to find their banks shut down, their accounts frozen, and their savings wiped out. The scary part? Most banks are far more fragile than people realize. And when trust in the system vanishes, it's game over. The end game: will banks be replaced? With more people losing faith in traditional banks, new alternatives are emerging. Rocket cryptocurrency and decentralized finance, DeFi, digital assets like Bitcoin offer a way to store value outside of government control. Rocket gold and silver, the original forms of money, still used by investors to protect against inflation. Rocket central bank digital currencies, CBDCs. Governments are exploring fully digital money, but with even more control over transactions. The biggest question is, who will control money in the future? Will we continue to rely on centralized banks that manipulate the economy? Or will we transition to a new financial system where individuals have more control over their wealth? One thing is clear: change is coming. The current system is unsustainable, and as more people wake up to how money is really created, the demand for alternatives will only grow. What can you do? How to protect yourself? If you've made it this far, you're already ahead of 99% of people who never question how money actually works. But knowing the truth isn't enough, you need to take action. Pushpin: diversify your wealth. Don't keep all your money in a bank that could fail. Explore hard assets, digital currencies, and investment options. Pushpin: stay informed. The financial system is constantly changing. If you're not paying attention, you're at the mercy of those who control it. Pushpin: think beyond the system. The traditional banking system is designed to benefit banks and governments, not you. The more you understand how it works, the more power you have to make smart financial decisions. The most dangerous thing you can do? Assume everything will stay the same. The financial world is evolving, and those who don't adapt will be left behind. The final question: what will you do? Now that you know how money is really created, how banks manipulate debt, and the risks of the modern system, the question is, what will you do with this knowledge? Will you keep trusting banks with your savings, hoping they don't collapse? Will you continue working harder for money that loses value every year? Or will you start exploring ways to protect your wealth, your future, and your financial freedom? The choice is yours. Fire if you found this video eye-opening, hit like and subscribe for more deep financial insights. Speech balloon: what do you think about the banking system? Are we heading toward a collapse? Let's discuss in the comments. Rocket: turn on notifications so you never miss an update.